You've probably seen wealthy people, those who own luxurious villas, expensive cars, and live a lavish lifestyle, right? They seem to have it all, from financial power to the freedom many people dream of. But have you ever wondered how they got all of this? Luck? Or were they simply born with everything? The truth is, it's their smart investment strategies, ability to seize opportunities, and clear financial plans that help them build a strong financial empire. But not everyone knows the secrets behind this success. While we are busy chasing short-term plans, they already know how to make money grow, develop, and sustain long-term wealth. If you're looking for the answer to the question of how to make sure your money never runs out, this video is the key. Let's explore the investment strategies of the rich, the secrets they never reveal, so you can apply them to your own life. Part 1. Why investment matters. Investment, two simple words, yet they can be the key difference between an ordinary life and a successful, wealthy life. While most people only spend money on short-term needs, the wealthy view money as a powerful tool to generate additional income. They don't just leave their money sitting idle in a bank account, waiting for something to happen. They know that money must grow, must develop. This is why the wealthy are always looking for investment opportunities wherever they see them. It's not because they have too much money, but because they understand one important thing. Money cannot be a finite resource. Without knowing how to invest, you'll remain stuck in the endless cycle of spending and never achieve financial freedom. They don't let the money in their hands become dead figures, but instead, they create numbers that know how to multiply. Imagine you're someone who has a large sum of money. What can you do with it? Keep it in the bank? Why not? But remember that bank interest only helps you keep the money intact without generating anything more. The wealthy never let their money die like that. They understand that without investing, they are missing out on huge opportunities. Opportunities that you won't always see. You've probably heard about self-made millionaires. They weren't born into rich families or have assets from the start. What sets them apart is how they use their money. They invest in real estate, stocks, investment funds, and even creative ideas. Their money doesn't just sit still. It continuously generates passive income. These investments help them create sustainable and long-lasting wealth. So, do you want your money to work like that? Do you want it to work for you instead of just sitting there and passing each day without earning anything? If your answer is yes, then now is the time you need to change your mindset about money and start learning how to invest smartly. In this video, we'll dive deep into the investment strategies that the wealthy have applied to ensure they never worry about running out of money. Part 2. Investment strategies of the rich. We often think that the wealthy simply rely on a few large investments to make huge amounts of money. But the truth is, they don't just depend on a single income source. They know that diversification is key to minimizing risk and maximizing returns. It's the intelligence in asset allocation across various fields that helps them sustain and grow their wealth sustainably. Now, let's dive into the common investment strategies that the rich apply to protect and grow their wealth. 1. Real estate investment. Real estate is one of the most favored investment channels for the wealthy. They understand that real estate is not only a fixed asset, but also a powerful income-generating tool. Unlike other types of investments, Real estate offers returns from various sources: value appreciation over time and passive income from rentals. Investing in real estate is not a gamble. It's a carefully calculated strategy. Wealthy individuals choose properties not just for their potential to appreciate in value, but for their ability to generate passive income. For example, they might purchase a rental property in a high-demand area and earn monthly rental income. Real estate always holds its value in the long run and can significantly appreciate if the right choices are made. Moreover, they also invest in large commercial real estate projects where massive profits can be gained from renting out or reselling properties. Real estate investment also helps protect their assets against the downturns of financial markets, as real estate tends to be more stable. 2. Investing in stocks and securities. Stocks and securities are powerful tools the wealthy use to increase their wealth. But unlike average investors, they don't just buy popular stocks. They spend time analyzing and identifying companies with exceptional growth potential. They invest long-term, patiently waiting for the market's growth. The wealthy understand that securities can bring huge returns, but only when they know how to select the right stocks. They look for companies that not only have excellent products, but also strong growth strategies and massive potential for the future. They are also willing to take risks when necessary, but always have a clear strategy to navigate the market. Especially, the wealthy know that investing in stocks is a long-term game. They aren't swayed by short-term market fluctuations, but are patient and wait for stable growth in the future. This patience allows them to weather the ups and downs of the stock market, thus achieving significant profits. 3. Investing in mutual funds and ETFs. The wealthy don't always choose stocks or real estate on their own. They also know that to minimize risks, one of the smart strategies is to invest in mutual funds and ETFs. Mutual funds and ETFs allow wealthy investors to access a wide range of assets without worrying too much about selecting individual stocks. These funds help them automatically diversify their portfolios, reducing risk and maximizing returns. With mutual funds, you can invest in dozens or even hundreds of different stocks without having to track each company individually. ETFs, on the other hand, offer more flexibility, allowing you to invest in sectors, industries, or even countries that you believe will thrive in the future. With these strategies, the wealthy can access investment opportunities without worrying about excessive risks. While still earning profits from multiple sources, investing in these funds is an excellent way to protect assets, especially during volatile market times. Part 3. The importance of risk management. Investment is not a risk-free game. Every investment decision has the potential to bring huge profits, but it can also lead to unforeseen losses. That's why the wealthy understand that managing risk is not just a strategy. It's a vital factor in protecting their assets from uncontrollable market fluctuations. If you think that the rich simply make big bets on investments without worrying about risk, you're mistaken. They understand that asset allocation and regularly reassessing their investment strategies are the only ways to protect themselves from unexpected market shocks. Indeed, risk management is not a secondary step. It's an essential part of their investment strategy. 1. Risk management. Putting all your eggs in one basket? Certainly not. You've probably heard the saying, don't put all your eggs in one basket. This is the investment philosophy that the wealthy apply. They never put all of their assets into a single investment. They understand that diversification is the key to minimizing risk and maximizing profit opportunities. Investing in different types of assets helps them reduce losses when one investment faces difficulties. Instead of relying solely on one market, they allocate their assets across various sectors such as real estate, stocks, investment funds, or even derivatives. When one sector struggles, other areas help them maintain financial stability. 2. Continuous evaluation and adjusting strategies to master risk. The wealthy continually reassess their investment strategies. They understand that the market is constantly changing and that to maintain profits, you must always be ready to adapt. Investment is not a fixed strategy. It's an ongoing process of adjustment and optimization. They work with financial experts who provide them with the latest market information and insights on factors that could impact their assets. Regularly reviewing investments helps them identify potential risks and devise action plans before problems arise. This doesn't mean they avoid risks altogether. On the contrary, they know that every investment carries potential, but they are also willing to adjust their strategy when necessary. This allows them to protect their assets while not missing out on lucrative opportunities. 3. Using risk management tools. The wealthy don't just rely on their instincts when making investment decisions. They use risk management tools to help them make smart choices and reduce the impact of financial shocks. These tools help them minimize losses when the market experiences sharp volatility. For example, they might use options contracts to protect their investments from sudden changes in the stock market. Additionally, they use hedge funds to mitigate uncertainty from the market. They also know how to use financial insurance to protect their assets from potential risks. This smart strategy helps them not only protect their current assets, but also ensure that unforeseen events do not wipe out their entire wealth. 4. The mindset of the wealthy, ready to face risks. Risk management is not just a financial strategy, it's also a part of the mindset of the wealthy. They are not afraid to face risks. Instead, they learn how to master them. They understand that every investment carries risk, but instead of letting fear control them, they focus on ways to mitigate those risks through intelligent financial strategies. They don't allow themselves to be swayed by emotions, but always keep a cool head, carefully considering every decision with strategy and foresight. We can see that risk management is an indispensable part of the investment strategy of the wealthy. They never put all their assets into a single investment, but always allocate wisely to minimize risk. They continuously assess their strategies, use intelligent financial tools, and are always ready to adjust to protect their assets from market shocks. With these strategies, they can maintain and grow their wealth sustainably, despite market fluctuations. And this is the secret to their long-term wealth. So, are you ready to apply these strategies in managing your own wealth? Don't miss the next part of this video, where we will continue exploring strategies to help you maintain strong finances. Part 4. Building a long-term investment habit. Habits are the determining factor in maintaining and growing long-term wealth. The wealthy understand that establishing and maintaining a solid investment habit is key not only to building assets, but also to protecting and growing them over time. They don't just set investment goals. They consider checking and updating their financial situation daily. as an essential part of their lifestyle. The wealthy never stop learning and improving their investment skills. They understand that financial and investment knowledge is not something that can be acquired overnight, but rather a continuous process. For this reason, they dedicate time each day to research, stay updated on new financial trends, read investment books, and attend courses to enhance their skills. Learning doesn't stop at reading books or attending courses. The wealthy are always looking for opportunities to learn from those who have gone before them. From industry experts and experienced individuals, they attend seminars, investment meetups, and build networks with like-minded people to share the latest investment strategies and valuable experiences. For them, every day is an opportunity to learn and improve. Unlike those who seek quick and easy investment methods, the wealthy accept that long-term wealth requires time, patience, and a long-term strategy. They constantly review their investments to ensure they align with their long-term financial goals and are willing to change strategies if necessary. Daily financial checkups are not a mandatory habit, but it is how the wealthy maintain control over their asset management. They understand that only by knowing their financial situation clearly can they make wise decisions and avoid costly mistakes. And when you can maintain this habit, you will always be ready to seize new investment opportunities without missing any. So, if you want to achieve long-term wealth like the successful individuals, start building a daily investment habit. Spend time learning, improving your financial and investment skills, and always stay updated on market changes. This is the key to not only achieving your financial goals, but also protecting and increasing your wealth throughout your life.